Duncan Wilkinson, the ASG Managed Futures Fund, was up slightly in the third quarter, but that was far better than the S&P, which was down 7%. So I guess your fund and your strategy did what they were supposed to do, right?
It did. It did exactly. So we were up about 2% in the quarter, which doesn't sound like a lot, but to your point, the equity markets were down quite a bit. This fund is meant to do something different than just what equities do. So it was doing exactly what we wanted to do during the third quarter.
Can you explain the process behind the fund? I know the trend is your friend, you're betting on trends, but how do you know when to get on the wave while you can surf it and get off before it crashes?
Right, well that's the art of it. So the idea is we're looking for trends across 73 different contracts, stocks, bonds, commodities, currencies. And we look at short, medium, long-term horizons as well. So we can try to mitigate when you do want to get off and when you want to stay on. Trend following can be challenging when the trends reverse. The difficulty is to identify when it's just a short blip and a continuation or when it's a true reversal.
And one trend that really has come to an end, at least from my view, is that whole short the yen, short the euro, go long the dollar trade. A lot of hedge funds were diving into this trade, became very crowded. So where is that now and where are you with regard to that trade?
Yeah, you're exactly right. I mean, many people were playing that trade. We were in that trade as well. Right now, we're positioned out of it. We feel like that trade has kind of extended to the point when we don't see a strong trend in that. So we're no longer short those currencies as much as we were earlier in the year.
What about emerging market currencies? Are you getting away from the developed market currencies and finding new places, Vietnam, Thailand, wherever?
Well, we're looking across 73 different contracts. So yes, the emerging currencies is an area where we do continue to see weakness. We do continue to see a kind of a short trend in those markets, and we are continuing to play those, which kind of makes sense given what we've all seen in the numbers coming out of China, weakness in that area. You'd expect those currencies to weaken a little bit.
And we've seen commodities stabilize. It seems though gold has been range-bound. Oil has been range-bound between 40 and 50. So how does this affect a fund like yours?
Well, when they are range-bound, when they are kind of flat, there's not much of a trend. But that's why we're looking across as many different contracts as we can. So even within the commodity space, we're looking at things like corn and wheat, as many different commodity contracts as we can, because while those big ones, oil and gold, may have been kind of more stable, we can try to find trends in other commodity contracts.
And what about this whole Fed decision indecision? How is that affecting the way you manage your fund?
I think personally we'd like the Fed to raise interest rates. I mean, a lot of our fund is invested in short-term paper that supports the futures contracts we take. If rates went up, we think that that's a little bit of a tailwind for us. So frankly, I'd like the Fed to kind of get off it and begin to raise interest rates. At some point, they're going to have to.
All right, well, thanks a lot, Duncan.
Thank you.
And thank you for watching The Street.